Hey everybody, Kyle Sasser here, and it is everybody's favorite time of the month. That's right, real estate market statistics time. These real estate statistics are for the greater Dayton Metro area for December 2023. So these market statistics were compiled from November 2023 closed sales data. So some important things to know about these numbers and how we look at things. We don't typically compare month to month. So we're not comparing November 2023 to September, or October, or August 2023. I do keep an eye on them, especially recently, just because the market's been pretty wild the last year and a half. But typically we want to compare year to year. And the reason why is because the calendar year has a natural ebb and flow. Some months are busy, some months are not. Two examples I can give you is that at the start of the school year, the number of transactions drops pretty dramatically. Obviously, people are more interested in getting settled in to the new routine with school than they are in looking at or purchasing homes. Likewise with wintertime. A lot of people aren't really interested in going out and looking at homes when there is a chill in the air. So if you were to compare month to month, if you look at a chart of this, it shows up every single year like this, just the same shape shows up every year. So typically we compare year to year, so we are mostly comparing November 2023 to November 2022. Now, I am going to touch on a few month-to-month things because I think it's important in the current market because I don't know if we've ever really had this sort of setup. And I'm going to get to the why a little later on in the video. That said, this is a very in-depth video. You're in for about 20 to 30 minutes of a statistical explanation. If this video is not for you, I do also do a 2-minute quick take. It does leave out a lot of the context and the nuance, but if you're just looking for some base numbers, the 2-minute market update is a great way to go. Now the other piece is, Kyle, where do you get this data from? Well, this data is directly from the MLS. I used to wait for the MLS to compile this information, but they do not usually get that information out until the end of the month. And so I don't get the data until the end of the month. Then I have to do this video, then I have to edit this video, then I have to release this video. And it ended up being that the data was really 30 days old by the time the video came out, so not a lot of use. So I have manually started compiling these reports. You can download this report yourself. There's a link below. You can go to the website. You can download the report there. You can also sign up to be reminded of this report update every month. And of course, you can also, subscribe, bells, all those sorts of things. This data is pulled in the exact same manner that the state and local MLS pulls this data. I just happen to get it in hand 4 weeks ahead of time now. I do usually like to explain the difference between median and average sales price. So if you remember back to your math classes, you have an average and then you have mean, median, mode. Average is swappable with mean if I remember correctly, but getting into the weeds there a little bit. Average, everybody knows. Let's say that you have 5 houses, you add up the price that those 5 houses sold for, you divide it by 5, that gives you the average sales price. Median is a little bit different. Median is, let's say that you have 50 homes that have sold. The median is the point at which there is an equal number of homes that sold for more and an equal number of homes that sold for less. So it is more of the true midpoint of the market. Personally, I always lean a little bit more onto median sales price than average because average can be swung a lot if there was a significant number of low dollar amount homes sold in that particular month, or if an exceptionally expensive property sold, that can really, pull the average sales price up. So like if you have a few, if you have a few like $10 to $15 million properties sell, that can really yank that average sales price up. Whereas the median does not move as dramatically. All right, well, let's dive into these Dayton home market statistics. Total number of closed sales is down 4.2% from 1,033 homes to 990 homes sold. Median sales price is actually up 16.4% from $189,000 to $220,000. Average sales price is up 15.7% from $222,677 to $257,675. Median percent of original list price. What this is of that original asking price that the home was listed for sale, what is the final sales price? And that has been holding at 98.2%, which was a change of 0.8%. Median time to contract is down 6.1% at 46 days. That is not a major change. It was 49 days last year. Total number of new listings is up 10.1% from 1,018 homes to 1,121 homes. And total active inventory is down 1.9% from 1,636 to 1,605. Foreclosures and short sales, aka the doom and gloom section, is up 12.5%, which sounds like a big jump until you realize it went from 8 to 9. And total number of short sales is up an infinite amount from 0 to 2. Now, I do want to touch on some month-to-month numbers here, primarily median sales price. So November 2023, median sales price is at 220. The previous peak was July 2023, which was at 235,000. The previous peak was July 2022, which would have been right around that 220, 230 number. I don't have the specific number in front of me. It's in my chart. So I don't have the specific number here. It is in my spreadsheet though, but you can see it on the chart here. And so despite interest rates being in the 7s, and we even touched 8% there a month or two ago, we are still well above last year's median sales price of $189,000. Now, I do like to dive into some of the information on the various price points because a $1 million home sells at a little bit different time frame than a $200,000 home. Primary reason why is there's just not as many buyers of $1 million homes as there are $200,000 homes. Median time to contract, which if you remember for the overall market is 46 days. If we look at $100,000 to $150,000 homes, that held relatively steady, only a change of 2.3% to 45. $150,000 to $200,000 went down 8.3% to 44. $200,000 to $250,000 went down 10.2% to 44. $250,000 to $300,000 went down 4.3% to 44. I'm noticing a trend there. Got 3 44s in a row. $300,000 to $400,000 was down 14.5% to 47. At $400,000, that's when we see a bit of a break here. So that time frame actually went up 4.8% to 65 days. $600,000 to $1 million was down 26.3% to 56 days. A lot of that is going to be homes that were like $570,000 sliding up into that $600,000 price point. Then $1 million or more is up 39.1% to 128. Total number of closed sales by price. So $100,000 to $150,000 was down 16.8% to 144. $150,000 to $200,000 was down 17.5% to 174. $200,000 to $250,000 was down 4% to 143. $250,000 to $300,000 was at 114, which was held steady at 3.6%. $300,000 to $400,000 was up 23.3% to 159. $400,000 to $600,000 was up 44.9%, which is pretty significant. Total of 100 homes sold. $600,000 to $1 million was up 48.0% to 37 homes, and $1 million or more was an increase of 100%, which was 4 from 2. Now, if we're looking at total number of new listings by sales price, we can see that the break is basically at $250,000. So below $250,000, there's been fewer homes for sale. At best, $100,000 to $150,000 actually is a slight increase. It was up 4.8% to 196. But $150,000 to $200,000 was down 5.3% to 195. $200,000 to $250,000, there was 127 new listings, which was a drop of 11.8%. And then everything else above that is basically more. And the reason why here is not, I mean, we are building a lot of homes in that $400,000, $500,000, $600,000 range. But a lot of this is also because homes are sliding up into new price categories. So $250,000 to $300,000 was up 52.7% to a total of 139. $300,000 to $400,000 was up 56.1% to 167. $400,000 to $600,000 was up 35.5% to 126. $600,000 to $1 million was up 109.5% to 44. That is more than double the number of new listings compared to last year in that $600,000 to $1 million range. And $1 million or more held steady, 0% change, total of 6. So what the heck is going on here? How can we be building inventory and still have and still have median sales prices on the increase or holding steady. You would think that as supply grew, that prices would slide. And that is what I suspect is going to happen for the next few months as we get into the winter doldrums here. Because we sold 990 homes and we had 1,121 new listings. So we added a couple hundred at most, more homes than we sold. But active inventory is still holding relatively steady compared to last year. So we kind of have a few things going on here. First and foremost, the number of homes for sale is still historically low. Even though we have been building up some inventory, we are still drastically below where we were in quote-unquote normal market conditions of a few years ago. We are thousands of homes below that mark. And yes, interest rates are still in the 7s. They touched 8% for a short period of time a few months ago. The thing is inventory is so low that any shift in the amount of demand or closed sales rapidly chews through that inventory. So if we look back to winter 2022 to spring 2023, we can see that we did have a steady price slide as inventory built up until about March. And then the number of buyers came back, as they normally do whenever springtime hits. So the buyers came back, they rapidly ate through the inventory that we had built up. And then once inventory starts dropping, people feel the pinch. You start seeing a few more multiple offer situations and median sales prices climb. The overall problem with the real estate market is a supply problem. If demand was going to get killed, it should have been killed already. Again, interest rate, if you would have asked anybody 3 or 4 years ago when interest rates were in the low 4s, hey, are you going to be interested in buying when the interest rates are in the 7s? Everybody would have said, absolutely not. But we can see that we still sold 990 homes last year. We still sold 990 homes. Like, that is definitely not zero. And if we look at our historic numbers here, back through the previous years on this handy chart here, you can see that Novembers are usually lower. I mean, we're definitely down compared to where we were 2020, 2021, so far as total number of homes sold. Now, demand is down 50%, but the number of new listings is also down significantly. So both number of closed sales and number of new listings has both come down. Net result is any sort of shift in demand has an outsized impact on median sales price and also the felt demand of people that are currently buying in that market, which results in median home prices increasing. So what does this mean? Well, if you're currently selling a home or thinking about selling a home, just know that it is a natural ebb and flow as we go through wintertime for things to be a little slower. People are not as interested in looking at houses in the holidays. If you're thinking about buying a home, it is an exceptional time to look at homes. If you can stay focused and look at homes to purchase in the next month or two, that pinch of demand, especially compared to the previous year or two, is going to result in sellers becoming more agreeable to reducing prices. And normal market conditions, this impact is not felt quite as much, because when you have more houses for sale, this natural ebb and flow doesn't show up so much. But since inventory is so low, that ebb and flow of demand is going to have outsized impacts on the market. It just is. And it's not just Dayton. Every real estate market that I'm active in has this same sort of setup. Dayton's is a little bit more clear because of all the snow and such that we have here. The snow, the icy roads definitely keeps people more inside. But Tampa and St. Petersburg, that I literally just recorded the video for before this, is experiencing this exact same setup. So thank you for tuning in for these market statistics. If you have any questions, comments, concerns, if you would like to dispute any of my interpretation or analysis, feel free to leave me a comment down below. I'll be happy to have a conversation with you, and that is me being serious. Always happy to hear different viewpoints or bringing new information. Absolutely perfect. If you would like help finding your own amazing home in the greater Dayton Metro area, I would be happy to help you out. You can reach me at 937-907-6777. You can text me or give me a call, whatever you want to do. And there's also a contact me link in the description below this. You can go there, book a chat at the time that works best for you. So once again, thank you so much for tuning in for these market statistics. My name is Kyle Sasser, and I'll talk to you soon.